All right, good morning, everybody. It's Friday, April 8th, 2022. Let's go ahead and get started here. I want to really quickly go through our 512 and look at what happened yesterday. We really didn't trade because we were stuck right within the previous daily price action. So just to zoom out and look here, on Thursday, the market basically chopped up and down in this range between 44.44 and 44.96. Now, again, I want to toot our horn. 44.54 quarter was the support level at the beginning of the day. Then the market sold off through there and came down right to 44.44. 44.45.50 broke it by 4 ticks, and that was the low of the day. And then came up, and the high of the day was right into our expected resistance up at 96.75. And then we came down in the overnight session that night going into yesterday morning and held 44.54 quarter in the overnight session to the tick. Market then bounced up, hit 96.75 to the tick in the overnight session yesterday, or the night before yesterday, and then sold off down. And then we opened here, and we opened right in the middle of the overnight range and all of the price action from the day before. So I told everybody basically we need to get the hell out of this little zone here, otherwise it's probably going to be really sideways and really choppy. Well, what ended up happening? The market just chopped up and down right around the 50% range of that range from the previous day in the overnight session, and really didn't do much until finally it came over and held our orange power level almost to the tick and sold off right to 44.54 quarter once again. But I want to show you, I called one trade here to try a long off VWAP. As we were starting to get some bullish momentum, I decided why not see if we can maybe catch a nice bounce right off that. Those a bunch of moving averages were lining up there. We had the orange power level, everything was lining up. We had previous resistance. It was 50% of the push up from that low all the way to that high. Everything was there. It was a beautiful trade. It only pushed about 3 or 4 points and again went sideways. And that's why I told everybody yesterday, don't get too frisky. Unless you're a scalper and you can navigate all the short time frame undulations, it's probably a good market to sit out of. Stay flat and wait for the market to actually do something instead of just kind of chop around like this. So it did eventually, like I said, hold the orange power level, come right to 54 quarter, bounce 1 tick in front of it, and then go through it by 4 ticks, and then kind of held it for a little while. And then what was the low of yesterday? I can't believe this shit. 44, 44, 50 once again, right into that 45.50 level, breaking it by 4 ticks, and then getting this huge rush. Where did the rush get back to and find trouble and pull back? Right into our 74.50 to 77 zone that we've been watching for weeks and weeks now. Pulls back from there, finds support just in front of VWAP, and goes ahead and chugs here in the at the end of the day. And what is the high of yesterday? What was the high of yesterday? Anyone want to take a guess? 17 quarter. What level did we put on the chart yesterday and said, even though we have a whole bunch of levels over here, including 45.13, the major structure zone, we put this specific level 17 quarter on the chart. It was a retracement level of the larger leg. If you zoom all the way out and you look at the bigger leg and you draw your fib, we had, I believe, the 50 or the 61.8 sitting right there at I think it was 1650 when I redrew the fib correctly. So I was off by a few ticks when I actually drew this yesterday morning. But look, it came right to it, right into it. Even if I drew it at 1650, it went 3 ticks through it. And that was the high of yesterday. It just blows me away. Every friggin' day, we seem to call the highs the lows and the major rotation levels. Again, we don't know which level holds because we do have a whole bunch, but typically one of them holds like a gem. So that's where we find ourselves this morning. We came right up into that 17 quarter. Again, I think the actual retracement level was 1650 if I here, let's look real quick. If you're wondering what the retracement level I'm talking about is, if you zoom out, this sell-off from the high of April 5th down, so basically this leg here, if you look at these legs, you've got the leg down, the leg up, the leg down, the attempt to push back up, the leg down, the attempt to come back up. And then you have a little pullback, and then it starts to get this bullish momentum and start pushing higher. We get all the way up here, and now it starts to sell off. The major sell-off leg, this whole thing from here all the way down to the low at 44, 44.50. The 50% retrace was at 16.75. For whatever reason, I drew it at 17.25. It might have been because I actually drew the fib leg maybe off by a few ticks. Nonetheless, if you look at this, we came down on this leg. We found a double bottom here at 44, 44.50. The market came right to the 50% retracement level. Again, yesterday, came to the 50% retracement level basically to the tick and pulled back. All right, and in the overnight session here, you can see we peaked up and went ahead and tested that 50% level and then got rejected and pulled back. That's a little clue to me that, and especially with a bearish divergence there on the 60-minute chart, that's potentially a clue that we're going to come back and retrace this smaller leg right here from yesterday's low all the way up to our overnight high. Now we've already gotten a lot of the retracement, right? We're already through the 38%, and the 50% retracement would bring us right down into 44.82.25, and our 50% of yesterday happens to be basically the same range, right? Because we have yesterday's low to yesterday's high. The overnight high was only a few ticks higher. So basically 50% of this whole leg and 50% of yesterday are the same thing, right? So we have that little zone there. That's the next thing I'm targeting here to the downside, assuming that the bulls can get through this little area around 44.86. And why do I say 44.86? That's because we have pretty good resistance here yesterday right at that level. This is an hourly chart. Each bar is 1 hour of price action. We came up here to a high of 44.86. We came up here on the next hourly bar, made a high at 44.86.75. And then a few hours later, after we rejected from there and came all the way back up, we've got this candle pushing and pulling back with a high of 44.86.25. So that 44.86 level coming across here is in front of the 50% retrace down at 82. So just be aware of that. That might be a little bit of a trouble spot as the bears sell off here, or if they continue to sell off. Remember, we don't know what's going to happen next. All we can do is lay out the major areas in the market that make sense for there to be some type of bounce or resistance from, and then trade back and forth between all those levels. Anybody telling you that they expect this or they expect that, they're full of shit. That's exactly it. Remember that the market is continually changing second by second. There's always new data coming in, and there's world events affecting the market that can change on the drop of a hat, right? So nobody really knows what's going to happen next. So that's all we can do is find those good levels. So I think let's just go ahead and jump up. We've covered a lot of the stuff this morning, but our higher time frames don't have much new to say. I want to go down to the daily or up to the daily and take a look here at the lows we made yesterday. So remember, the day before yesterday was a low at 44.44.50. That should be familiar, right? 44.45.50 was our eye level. Then we came and yesterday retested it to the tick at 44.50 again. And when I went ahead and looked, the potential bullish divergence that I was seeing form is technically still there. So finally, we've got basically confirmation now that we can argue there's a bullish divergence from that 44.50 low. Now, does that mean we're going to push 200 points back up? No, it doesn't mean that. It means if we start to get some good bullish momentum, the potential is there for a much larger move. Doesn't have to happen. Sometimes we get a daily signal, it only pulls back 50 points, and well, how many was it here? Yeah, it pulls back 50, 60 points and then keeps going. But most of the time, when you get the follow through from a daily signal, you get these major moves. So I'm going to keep in mind that we do have that there. And the other piece of information or the other interpretation that we can take from this is if we have a nice daily bullish divergence from 44.50, if that breaks and the bears get through there, that's opening us up to everything else down here. So that's a way you can use it to orient yourself as far as being bullish or bearish in the move. So we've got that going on the daily. And you can see that we attempted to go ahead and push through that previous daily bar, right? So we came up, we got a bullish bar here, a green or blue in my scheme here, a blue bar, but there was just not enough strength to go ahead and get through the previous daily high before that. So today it's going to be very important to do that. If the market does not get through the high from 2 days ago, which happens to be 45.2875, then I think that's a clue that we're either going to be sideways here or it's going to continue to retrace this major leg that we've been watching here for, I don't know now, maybe about 2 weeks as it's been pulling back here. So keep in mind, 2 days ago, the high up there at 28.45, 28.75, which we happen to have must be a fib level kind of drawn very close to there. We're going to want to see that break to have faith in the bulls this morning. So let's go down into the 4 hour, and I want to show you again, emphasizing the structures in the market. Remember, you can look at this as major structure zones. The other way you can look at it is we're looking at the most important major support and resistance levels in the market. And so again, if you zoom out and you look, all of these structure boxes that I put are basically levels that would be considered the strongest support and resistance levels if you look at all the historical data for this specific market. So looking at this right now, we came up right into the break, that support and resistance zone there, right around 45.13 to 45.17 area, which again, if we look at the leg down, this from the last few days here, pulling back, that 50% retracement level, 45.1675, or remember I drew the level at 45.17 quarter, that 50% retracement of this sell-off happens to be exactly the bifurcation or the end of a structure zone right there. So we came up into that, we got rejected, and actually we came up into that zone and got rejected yesterday. That was the high of yesterday. We pulled back and the market just pushed right back up into it and got rejected. So now we've got two rejections from that major support and resistance area. Again, 45.13 to 45.17 right there. And so the idea here is we're now retracing this leg and coming back down to the next major support and resistance or structure zone down here. Wouldn't be surprising, but remember we have a whole bunch of levels in here that we need to pay attention to. So let's go ahead and jump down to the 60-minute and take a look here at what we're dealing with coming into the open. We've got, well, first of all, let's look at this. We're down below the previous daily high. We're down below the orange power level. Those are two things that you should understand the interpretation of by now. So a little bit of a bearish clue that we're below those two levels, but we're still above the magenta line, 50% of yesterday. So that's going to be important there for the bulls to hold, right? If we're looking at the interpretation of just previous daily price action. So let's look here. We've already tested the 38% retracement of the push from the two previous daily lows at 44.50. So getting down into the 50% retrace of this leg, also being just about the 50% of all the previous chop for the last 2 days, is going to bring us right here into this zone about 44.80 quarter to 82 quarter here. So that's our first expected support this morning. Again, assuming that the bulls don't defend the 38 retracement where we are right now and start pushing out. So that would be my first little zone to watch. Again, I can't forget this. We need to point out we've got 86, and let me go ahead and shade this whole thing. The major high is 86.75, and so it's 86.75 basically to 86 right here. There's a little potential expectation that we could see some type of reaction there because that was a major resistance yesterday. So let me go ahead and get that on there, and I'm going to make sure that we expand this out for the whole day. And let me just make sure we've got 86 to 86 quarter or 86.75, and we'll lock it in place and get it on all the charts. So that's my first expected support before we get into that potential support around 50% of yesterday's price action. A little bit deeper than that, and we've got this, what I would emphasize here, and I'm going to highlight it so we get kind of a darker shaded area, is that we focus in here on 74.50 into the 61.8 retracement level, 44.73 quarter. So a little, really just a little 1 point range there from, again, 73 quarter to 74.50. That to me is the more relevant little 1 point zone than the whole thing, but we can't discount the fact that 44.77 is sitting there. That has been a really relevant level, and there's a reason I've been saying in a lot of these areas we've got, say, 73 to 77. In fact, I think we've been watching 44.73 to 44.77, and then 45.44 into 45.47. Seems like we keep running into these little pockets like that. But we do have technically 77 to 73, which is a 4 point range. I'm a little bit more interested in that little tiny pocket at the bottom end. Any further than that, it's going to bring us to our minor eye level, which, who knows? We could come right into that and bounce out. In fact, yesterday, if we go back 44.67.75, pretty sure, and let me just see something. Yeah, so 44.67.75 going. I thought we had a really nice break, pullback, and then, yeah, so yesterday we came down, and I really should have called this just as a try. But again, it was very sideways, it was very choppy, and I told everybody just be patient, wait for us to get outside of this area. But anyway, we came down and we held 67.75 here, broke it by like 3-4 ticks, and got this push right back to 50% of the previous day from yesterday. So right up into that. So to this morning, you never know if we're going to come into that level and have some trouble. So let me go back here to where I was. And I was looking at two different levels. I'm sorry, I'm mixing up those two levels. So forgive me. So we have 67.75. It was really relevant in the overnight session from yesterday, so I didn't go back far enough. But we came up into it and got rejected basically right off it. So that's what I was looking for there, and I mixed it up with that 96.70. I don't know. I got it all screwed up. Forgive me. So 67.75 would be a potential area for some support. And then a little bit further than that, we're right back into 54 quarter, right back into the 45 and 44 area. And then from there, we got to talk about what's below that major low. And then hopefully we'll have enough time to jump up to what we have above, assuming that the bulls get really strong here. So let me try to hurry up. And I guess it's basically all the same stuff down below. So if the previous daily low does break, what do we have? 44.31, 44.15 quarter. We've got 44.11 and that swing at 44.06. That zone, again, looks very, very promising to me. And then a little bit further would bring us to that 43.97, 95, maybe 4400, somewhere right in there. On the flip side, let's look at what we have above because we're running out of time. If things start to bounce out, again, wherever they bounce, we don't know. We just know the most relevant levels they could bounce from. So look at what we have above us. First things first, if they bounce out, I'm watching this little zone here around 08 to our orange power level, or this basically this whole little shaded region here. If it starts to bounce out, that's what I'm going to be interested in, and I'll expand this out to at least 2 p.m. today. I don't think it'll fill that because it's, let's see. Cool. So at least that'll cover for today. So if the bulls bounce out, we've got that level. That's going to be critical to get through. And like I said, If the bulls can then get through the previous daily high and the overnight high, which is just a few ticks above that, that's going to open us up right up into our 45.27 to 45.33 level that we were watching uh, for the last 2 or 3 days. And so let me expand this one out as well. Let's see if we can do 2. I'll apply. Okay, perfect. So we've got that. And then let me zoom out and we're going to take a look at the whole retracement. So 61.8 of the whole sell-off of this leg happens to be at the top end of this zone that I just talked about. So 27 up to 31, and then that swing is up at 33.75. That would hit the 61.8 to the tick. So what I'm going to do here is delete that 32. I'm not sure how that one got on there, but that one up there at 33.75 is the 61.8 to the tick. So be aware of that. And then a little bit further, we do have the 27 extension of this leg, which is the most relevant extension right now, sitting here at 45.40 quarter. So I'm going to just mark that because pulling back, bouncing around one of the 38.50 or 61 and pushing and getting through that high of the leg, that's really the first target when you look at it from the perspective of fibs. And we see the 27 hit so often, it's so uncanny. So I'm going to mark it there as dash dot. And so that will be our extension level up above. A good target if it starts to really rip. Any further than that, it's going to get us right into this pocket between 45 and 46, give or take a few ticks. So let me expand this out to 2 p.m. as well. And then from there, right up into the 45.53 to 55 zone. And I think that's it. And remember, 45.66 is a level that we've been talking about for a really long time. So let me bring this out. Oh, it's PM, that's why. I'm like, what the hell? If it gets through there, that 66 level, notice the confluence here, the 61-unit extension of this really important relevant leg. And that level has been very, very important, and we just never got back yet. So watch that up above. And the market is just about to open here. So we're going to jump down to the short time frames, get with our members, and see if we can't find some trades this morning. So have a great day. We'll see you tomorrow, or see you on Monday. Have a great weekend.